Recently, the path of least resistance for the stock market has been up. However, as you can see, it is getting more precarious. With the S&P 500 just one big short squeeze away from all-time highs and second quarter earnings for the most part beating expectations, the market has rarely looked as strong. And yet, investors are starting to get nervous. First, Netflix flickered. Then Facebook face planted, and now Twitter whimpered. Is the foundation starting to crack? Let's take a look. First, let's start out with the 20-year monthly chart on the spiders. And as I've said before many times, I'll say it again. This here is the area where I think we're going to have some problems, and that is equidistant to the previous high set earlier this year. So we're approaching that level, and we're just a whisper away. But as you can see, the market's getting nervous. If you experienced trading this week, you know that the market is getting nervous. Moving on down here to the MACD, we've talked about this even several months ago, that the fast line coming down to the slow line is likely to reflect back up here. That's exactly what it's doing. So we want to watch this reflection here to see how strong it is. Right now, it's not very strong. We see the reflection here in the MACD histogram with just a slight upturn in this one last bar here at the very end, if you can see that. So we want to see a continuation of that. Looks like the relative strength index is continuing to head up, so it looks fine. So does the stochastics. Volume is dropping off from the beginning of the year. You can see this drop off. So that is one sign, one caution sign. The Williams looks like it's heading on up too, though, as are the other oscillators. So everything looks generally good for the most part. But again, I want to have you understand that the warning lights are on. There are some caution signs out there. All we have to do is just pay attention and watch. Let's go to the weekly chart. This is the 2-year weekly chart on the spiders. And this dish here, moving on down, consolidating, and moving on up, looks very good. I like that. So no real problems there. Moving down here into the MACD also looks good with the fast line reflecting off the slow line and moving on up. It's above the zero line, and both are heading up with a bit of acceleration. Looking into the histogram, that also looks fine. No problems there. Here we are into the price rate of change, and this is caution sign number 1. The fast line came up here, bounced off the 20 line, and is heading down. So, as you go back here in history, it does that often. Heads on up and gets reflected back down, all on its way up. So, hopefully, things are going to continue on their way up here. Moving into the relative strength, that looks decent too, with a moderate level of 66.30. We're above the 50, reflected off of the 50 line back here in, say, late June, and headed on up. So that looks fine. Now, the stochastic is a little bit different. We're in the overbought territory above that 80 line, and the fast line looks like it's curving over. The slow line hasn't yet, but it's on a different measure. The fast line is curving over. So we go back into history and we take a look at other occasions, and that hasn't been a problem. So hopefully it won't be here. It's just something we need to keep at the back of our minds. The volume, as in the monthly chart, we can see the general decline heading on down here. So that is a definite warning sign. And then the William can stay up here in the overbought territory for a good period of time, but we've come up, bounced off, came down, and then back up, and then we're bouncing off of that and heading on down. So nothing unusual. We're just oscillating in this upper overbought territory. So no real caution sign there. Going back up, things look decent. We're trying to head up to that previous high, and we're very, very, very close to that. I don't think we're going to get it next week. Perhaps the week after, we'll see. But we need to pay attention to that as we approach that, because there's a bunch of nervous Nellies out there, and that's when some selling can happen and some accidents in the market can occur. So let's go to the daily chart. And we are here looking at the 6-month daily on the spiders, and I've input these trend lines here. And let me show you how to do that. Going down here and all the input information, you can use the linear regression line, and I put in a 75, and you're just going to have to put in any number that you want and see how it fits. But it seems like the 75 works generally well, hitting the top and the bottoms. We came through here in this time frame, and back here went below that bottom trend line, but for the most part it works. So it looks like we came up here on Wednesday, and then on Thursday and Friday we headed on down after more or less reflecting off of that top here. Looking into the MACD, definitely the MACD is turning over and looks like it'll probably continue down into next week, as it did say in here, that period in the latter part of June. And here we are into the histogram. Looks like the histogram is also declining, and the price rate of change really shows us the fast line moving through the slow line at that point, and then the relative strength also heading on down, and then the stochastics definitely heading on down here. So I expect this to continue. I'm not sure if it'll turn around like it did there. Right now, I think things turned somewhat negative, so I would imagine at least a downturn of this length, perhaps maybe even a downturn of this length here. So we'll have to wait and see how things develop into next week. Volume looks fine, and then the Williams continuing on down as well. So back up here. Now, a couple of videos ago, I asked people to give me their expectations of what was going to happen in the market, and I got a couple of responses from Marco and Yvonne, so thank you very much for those responses. I want to ask for some more responses of where you think that the market's going to go from here. I'm doing this for a couple of reasons. First of all, as a small channel, anybody that hits the like button, makes comments, or subscribes, definitely I want subscribers. That all helps out a small channel. But I also want you to engage, because we're getting to a point in time that the caution signs are coming out, the warning signs are coming out. So it's getting a lot more precarious, and I want you to engage, not just me, but yourself into the market, because it helps. It helps yourself understand where we're going, and it helps your decisions in making purchases and sales and so forth. So I want you to engage. Now, looking at this thing here, this is an interesting trend line. Oftentimes these trend lines are what you could call a self-fulfilling prophecy, where they tend to want to kind of hit these points and then reflect back off. It's very, very common to see that. So that's what's happening right here, and I think we're going to try to reach for the bottom here. And so the question is looking at this chart here, can you trade this? Well, I can, and I do at times, and it does look easier than it actually is, and so that's why I want you to engage. I also want you to subscribe and then hang here with my channel, because right now our concern is making some good decisions and saving some money. But later, perhaps after a correction or whatever, later, I'm going to show you really how to make lots of money going long and then making money in trading. So pay attention, engage, subscribe, and we'll see you next time. So for ChewDog Charts, thank you.